Okay, cool. All right. So I'm sure you guys are aware this is a basic candlestick chart. Now, the chart starts and ends with the current price at the end, and then starts with the opening price for the chart at the beginning. So Bitcoin was first listed here in 2020, paired with USDT on Binance, or on Bybit. Actually, this is Bybit. At the beginning of 2020. So that's why the price starts here and ends here. But just to start off, if you guys are trading cryptocurrencies, then I would highly recommend that you use the Binance chart instead. So if I go here, type in BTC, I'm going to go and select Binance chart. And that's what you're going to want to use for the majority of your trading. You don't want to be using the other charts because Binance has the most liquidity and they trade the highest volume. So let me clean up the entire chart and we can start completely fresh. So this is the weekly time frame, meaning that each candle here is going to represent 1 week. As you can see, this candle that we have left on, or the time remaining on this candle is 5 days and 8 hours, meaning that 22 hours and 1 day has elapsed already. Or sorry, not 22, 16. And that is the time remaining for the weekly candle to close. And then you'll see that the candle will stop moving and there will be a new candle that forms next to it. So again, this is all very basic shit. These are candlesticks themselves, and this is a candlestick chart, obviously. Now, again, with this being a weekly time frame, meaning every candle is 1 week, we can therefore go into our menu and we can select different time frames. So if I wanted to, I could do a whole year's worth of charting. Obviously, this is only going to be 6 sticks, but you can change the time frame of our chart as we see fit. So most of the trading that you're going to want to be doing, depending on whether you're a swing trader or a scalper or anything like that, we'll go over what that means in a second, are going to want to be below the daily time frame. Now, a lot of the big institutions and investors and all those type of things, they'll use the higher time frames to signify, investments and things like that they're going to be holding for a lot longer. But for the most part, we're not worried about where this is going in 2 years. We just want to trade the interim price action. So we're going to trade below the daily time frame. Now, before we were at the weekly, so if I move over to the daily time frame, you can see that we've been bearish. And by bearish, I mean price has been moving down and been in a downtrend. Bearish generally signifies downtrend, and bullish signifies an uptrend. Or, for example, this is a bearish candle, meaning that the price went down from the open and it closed lower than the opening price, meaning it's a bearish candle. Bullish being the opposite. Bullish being one of these white candles here, and it closed above the opening price, making it a bullish candle. Now, you might recognize that my chart is a bit wonky. It's got white candles for the bullish and blue for the bearish. Now, the reason for that is that there's been some evidence to signify that perhaps there's some psychological elements that come into play when you have a red and a green chart, because our brains, since the day we were born, automatically associate red with bad, green with good, and it can wig you out if you're in a trade. Like, for example, if I was in a short position right here and this was my drawdown, I would be freaking out right here if this was red, like, for example. And then when you see green, you get all happy and giddy and blah, 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 blah. So that's why I change the color of my chart. But if you're a very, very beginner, then this is not something you really need to worry about. It's just something eventually that you should be doing to save yourself a bit of grief in the future. But again, we have other things to worry about until then. Now, as far as instruments go, this is just Bitcoin. If you guys have any specific instruments that you trade, and if you don't trade one of the instruments that I'm looking at, then put it in the chat, and I will go over that instead. But as far as I know, most of you guys are trading cryptocurrency, so I'm going to stick with Bitcoin for now or unless somebody says otherwise. Okay, so we've gone over what candlesticks are, what each of them means based on the color and based on the orientation. And besides that, I think what we should also go over is market structure, market trend. And again, we've kind of covered a little bit of that already, bearish and bullish. So one of the examples of market trend is going to be something like this. So here we have a high, here we have another high, and here we have another high. So I'm going to give you guys like 20 seconds, not even, to just find the pattern here and just and see where exactly these highs are located. And again, I'll give you like another 5 seconds to think about that. But the answer is that these highs are each lower than one another, meaning that we're having lower highs and have entered a bearish market trend or market structure. Exactly, you can't lower highs. So now, with that being said, we can identify also some other key movements and things in price action, like lower lows, for example, which we have one right here. We have a lower low. There's one low here, lower low here. And we can also kind of play with some things like, this is a low here, a low here, a low here, a low here. But then we've got some higher lows and so on and so on. But for the most part, I'm talking about this low here and this low here. So we have made a lower low on the daily time frame. And that would indicate bearish market trend. And current market sentiment with, current market sentiment with Bitcoin is that we are going to see lower prices. So if we see another low on the daily time frame somewhere in the next few months, I would not be surprised. Something that looks like this, maybe, filling this price inefficiency and then coming back down and making a lower low somewhere around here. Who knows? But that is the current sentiment. And again, sentiment is something that we can decipher from market trend itself, which is the fact that we have lower highs on the daily time frame. And if we even go to the weekly time frame again, like how we started with, we can see that that's much more defined. So like Stan was saying earlier in the live stream, if you're having doubts about the way the price is going, all you need to do is pull out. So again, if we pulled out from the daily time frame where we have some of these little, this choppiness in between this low and this low, if we pull out a little bit more to the weekly, we can see that it's a little bit more clearly defined. So we have a low here and a low here with not too much more choppiness in between, but there is some. So if we wanted to look at that even farther, we could go to the monthly time frame, and that's, wow, it's like there's 4 candlesticks in between there. So we've got a much more clearly defined lower low and another lower low here. Okay, so we've we've managed to analyze market structure, and now it's okay. So how do we take a trade from here? Like, given all this information, how do we take a trade? Well, it's not exactly that simple. You can't exactly just enter a trade right now, given that you know the market structure. I mean, I suppose you could, but let's say we entered a short here, given that we know, or we speculate, that price is going to make another lower low at some point in the future. I mean, you could have to hold drawdown anywhere from, up here at this price inefficiency, or, I mean, who knows? It could tap these highs here. We have no clue. So what you need to do is wait for entry. And when I say wait for entry, I mean wait for the point where, given your analysis and given your own research, you think price will start to pivot from there, and you're not going to have to hold too much drawdown. Now, granted, if you have $1 billion, you can place a trade and you can sit and draw down for as long as you like, and in a year you'll probably be in profit, so you're not too concerned. But we're not philanthropists. We don't have disposable income like that, so we need to make more efficient decisions, and we need to be a little bit more expedient and efficient. So when I say find an entry, we need to wait for a point where we think price is going to reverse. And again, this is all speculation, and I don't know if you've ever seen The Wolf of Wall Street, when Matthew McConaughey is talking about everything's a fugazi, wazi, woozy. Nobody knows it's going to go up, down, sideways. It's kind of true. Like, there's some truth to that, because really all we can do is speculate. Nobody knows for sure. Right here is where price is going to stop, right? Unless I'm a billionaire and I'm going to dump, $1 billion worth of shorts in the market or whatever, then we have no idea what price is going to do at this point. We can speculate. But I'm not going to cover exactly how to to find a perfect entry right now, because there really is no way, and we'll get into strategies in a later time. But right now, I just want to cover the bare basics with you guys, because that's what the survey had indicated. So, okay, so we've got market structure, we've got candlesticks, and another thing I wanted to talk about a little bit was your chart. So a lot of guys get into this, including myself when I first started trading. They get into the chart thinking that, okay, I need this indicator, I need to make sure I have my volume, I need my moving averages, I need my VRVP, I need fucking the MACD, I need all this different stuff, right? But all you're trading at the end of the day is price action. This stuff down here is just confirmation for you to enter a position given the current price action. But at the end of the day, all you're trading is this right here. So with that being said, if theoretically you were to learn how to trade just based on the candlesticks themselves here, then you'd be better off, because you don't need these to help you in your decision to enter a trade or not. So with that being said, I like to turn off all of these things here. I like to turn off every single one. There is occasions where I will have some of them on, or I'll have one on. For example, I do like to use the VRVP from time to time. And I know this doesn't make a lot of sense right now, because I just said you want to trade price action, but trust me, once you start to learn a little more, some of these things may prove semi-useful to you. But for now, you should really just avoid thinking about these at all, because you need to learn the fundamentals and the basics of price action and things like that. Okay. So, okay, that was indicators. Let me think. Oh, yeah. Okay, so I covered a little bit about how your chart is going to look red and green to start. The red candles are going to be the bearish candles, and the green candles will be these. In TradingView, remember that we don't execute our trades here. So you can set up this chart however you like, whatever is comfortable for you. And then from there, you'll use whatever trading platform you have to execute your trades. Remember, TradingView is not a broker. They're not an exchange. They're not facilitating your buys and your sells. We just use this platform to chart with. And a lot of guys don't even use this platform to chart with. Stan, for example, uses or used to use another charting platform or something along those lines to chart with. So you don't have to use this stuff, but I would highly recommend it, because we have everything available to us. I mean, if I want to go to the S&P, I can. If I 5 seconds later feel like going and look at Bitcoin, I can do it. Dogecoin, freaking gold, dollar yen, whatever. So yeah. That's something I want to cover quickly as well, is the fact that I know most of you guys are trading crypto. I don't know exactly your specific challenges or your specific trading styles, because the survey is pretty much anonymous. So, but yeah, no, you're good. I know some of you guys are trading crypto, or most of you guys are trading crypto. Some of you guys are trading forex. Now, for me, when I started, I'm going to pretend like I'm addressing myself when I started trading. Forex is its own animal, and it's a whole nother ball game than cryptocurrencies, because cryptocurrencies are very unregulated at the moment. I mean, that stuff is coming, but for right now, you can hop on Bybit or a equivalent exchange with no KYC verification. You can trade 100x leverage, and you can lose all your money in 5 minutes if you want. You can do the same with forex, but things are much more regulated, and they move much more smoothly. So again, cryptocurrency, we are trading pairs against each other the same way forex is. So if I go to the Bitcoin chart, you'll see that we have Bitcoin against the Tether US, which is USDT, which is a stable coin, and it tries to mimic the price of the US dollar. They say that everyone is backed by $1 US, but they say a lot of shit. So even though this is cryptocurrency, we're not trading forex, we're still trading pairs, the same way that if we were to go to Euro USD, we're trading the euro against the US dollar. So funnily enough, they have a lot of similarities between them. And again, if I'm speaking like you guys are kindergartners and you want me to speed up a little bit, then feel free to do so. But I'm just treating it like if I was talking to myself when I first started. This is all stuff I would want to hear. Hi, I got disconnected. Can you share the link? This is the link, bro. This is there's no link. This is it. I will hook you up with the recording afterwards, though. Anyway, yeah. So forex. We have a bunch of different pairs in forex. Meanwhile, in cryptocurrencies, generally speaking, the trades that you're going to make with Bitcoin, Ethereum, Dogecoin, Link are all going to be against one of the stable coins, either USDT, USDC, depending on the exchange that you pick. Sometimes you can see trades taking place between BTC and ETH and Doge and Link and blah, blah, blah. But those, generally speaking, are just going to be exchanges happening, like somebody selling. They want to trade their XRP for Link. That's not usually trades like people are taking to make a buck, but it does happen. So again, you're going to see mostly USDT against the given cryptocurrency. And now the same thing, if we go over to forex, like I said earlier, applies with like the US dollar, for example. I like to just trade the pairs that are against the US dollar. So we have the Japanese yen against the US dollar. We have the euro against US dollar, and we have the Great British pound against the US dollar, and also gold, of course. But gold is, again, kind of another thing. I'll cover that later, maybe in another class, because commodities and those type of things are, again, another ball game from forex and all that. So where was I going with that? Oh yeah, okay. So US dollar paired against the euro, same way we have the US dollar tether paired against Bitcoin, and so on and so on. So how do you pick what to trade? Well, the thing is, if you live in the United States, your options are not great, because we have a lot of regulation here. The SEC has a hold of a lot of this type of thing, and we don't have the options and the luxuries of our European friends trading 100x, 500x leverage on whatever broker they want, and with that whatever pair they want, and blah, 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 and so on. But if we forget about the location that we're in, and we just think purely about the efficacy of each, forex and crypto trading, it can go something like this, and you can weigh these options yourself. I'm not going to tell you what to trade, but you just make your own informed decision off of this. If we go to the Bitcoin chart, Bitcoin moves wildly. I mean, look at this. These candles are all over the place. This is a daily chart. Now, if we go to the Euro USD chart on the daily time frame, and we zoom to the same amount, we can see that market structure and trend is much more clearly identified here, because there's so much money in this market. I mean, billions and billions of dollars in this market. So things are a little bit more predictable, and things are more regulated, of course, as well. So again, let's go back to the Bitcoin chart, and you can see all these massive drop-offs and pumps and so on and so on. I'm sure you guys remember a couple years ago when we were really pumping and we made it to like 60, 70,000 or whatever. There hasn't been a point where a pair like your Euro USD is just going to fucking in 1 week, it's going to jump, to $1 billion, because it's not possible. The market is regulated, and there are things that go on behind the scenes that keep this stuff mildly tame. So if you are somebody who has a problem with all this type of volatility, and you're like, I don't know, I don't like this fugaziness, I don't know if it's going to go up, down, sideways, blah, 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 then maybe Forex is your friend, because this stuff doesn't move like crazy the same way that cryptocurrency does. On the flip side, if you enjoy the volatility and you see it as an opportunity to make money on a given trade, then maybe cryptocurrency is the way to go. And of course, depending on where you live as well, like for example, I live in the United States, and I can have access to 100x leverage on Bybit with no KYC verification. Meanwhile, if you live somewhere in Europe, and you can just sign up for Bybit, get KYC, and get 100x right off the rip. Now, if you don't feel comfortable with that type of thing, VPN and all that stuff in the US, then maybe this isn't for you. Or you could just trade 5x leverage if you want and just do swing trading. That was another thing that I wanted to talk about. And do we have time? Oh, yeah, we've only elapsed 20 minutes. let's say you've decided what you want to trade. Okay, you want to trade Bitcoin, for example. You're not really interested in forex. This is kind of, again, I'm talking to myself. This is how I was when I first started trading. I didn't have any interest in forex whatsoever. Now I love forex. I think it's even better than trading cryptocurrency. But for the sake of congruency, let's just say that I want to trade cryptocurrency. I'm not interested in forex whatsoever. It's like, okay, if we're looking at a chart on the daily time frame, it's like, do I really want to take a trade from, I don't know, let's say I'm literally Jesus and I caught the top of this on Saturday. Do I want to hold a trade from Saturday to Thursday? Not really. That's not my temperament. It doesn't fit my style, and it doesn't work for my personality type. I'm very type A. Like, I need gratification. Need to be in, need to be out. And that's, again, not really so much just me. It's the generation that we live in. I'm sure we're all young in here. I'm sure we're all born after the year 2000, besides Stan. But we all need that, that quick buck, that instant gratification. We don't like delayed gratification. That's just how we are with technology and things like that. So most people are going to gravitate towards something called day trading or scalping, even intraday trading, as it's called sometimes. Now, the differences between that and swing trading could be something like, again, for example, I may take a short position here, right? But if my TP is down here, I had to wait, 3, 4, 5 days to hit my TP. Now, for example, if we zoom into a lower time frame, for example, the 1 hour chart, let's say I adjusted my position size accordingly and I entered here and my TP was here at these lows. Well, I would have only had to wait 1, 2, 3, 4 hours to hit my take profit as opposed to 4, 5 days. So if your position size is adjusted accordingly to the trading style that you want, then you can literally pick the time frames that you want to trade with. Now, again, if you notice on the top left, going back to what we were talking about time frames, I moved down to the 1 hour chart, which means that each candlestick indicates 1 hour. We have 36 minutes left in this candle, for example. So that means 24 minutes has elapsed already. Now, this is how I prefer to trade right here. I don't like to be holding trades for longer than a day or two, if possible. Now, in forex, I mean, that stuff just kind of happens because things aren't quite as volatile. So, but again, that's one of the nice things about trading cryptocurrencies. And let's just pretend for a moment that you guys have decided you're all going to just trade cryptocurrency and you're not going to touch forex for now. That's one of the nice things about trading cryptocurrency is that it moves very, very quickly, and you'll see take profits very, very quickly. But on the flip side, you'll also see stop losses very, very quickly. So, for example, let's say I saw this doji right here, or this, I forget actually what this candle is called. That's one thing I should make clear to you guys is not to worry too much about what the names of these different kinds of candles are called and studying different patterns and blah, 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 and so on and so on. That stuff is retail trading 101, and that's how you end up getting eaten and getting turned into liquidity. So learning what a candle is called, like a certain shape of candle or the way it closes, or a certain shape of a pattern and price action, that's not going to be what makes you the good trader. And that's where I think most people go wrong when they start, including me. I thought, damn, so all I have to do is study patterns and see that, oh my God, this is a freaking symmetrical triangle right here and I can make billions of dollars. No, not even close. So don't worry about that stuff. For now, just try to understand the fundamentals that we're going to teach you in here, because we're going to skip over all that bullshit that they tell you that you need on YouTube, and then they sell you a course afterwards. Anyway, back to my point that I was making before. Let's say that I entered a trade here. I saw this candle stopping volume, whatever, and I'm like, okay, price is going to come down from here, and I'm going to put my take profit at these lows here, and my stop loss, let's just say 70%, whatever. I get in here, and then I'm like, okay, sweet, we're coming down halfway to my take profit. Awesome. This, mind you, this candle's 1 hour long. This is only 1 hour of 24 in a whole day. Boom, stop loss in one candle. One candle. So that would be trade over, done with. Goodbye. In one trade. Or I'm sorry, in 1 hour. That's part of the downfall, or one of the pitfalls of trading cryptocurrency, is that you're going to see stop losses just as quick as you can see take profits. And then look, this is one of those instances where I would have been like, shit, this fucking market is out to get me. And somebody like the CIA agent watching my screen is feeding the market maker my information, because look, it hit my stop loss, came down immediately, wicked into it, came down immediately, and hit my take profit. What the fuck? Well, my friend, you were just liquidity, and that's you're even more vulnerable to being somebody's liquidity in cryptocurrency, because the market is much more volatile and it's unregulated. So people can just dump money and money and money into this, and people can manipulate the shit out of it and take you out of trades. So I'll talk a little bit about identifying structures and things like that for a little bit. I just want to make sure that I finish this tangent that I'm on before I do that. I'm kind of all over the place, so you'll have to excuse me. And remember, if you have any questions, please type them in the chat box. We're going to go for another 20 minutes or so, probably, unless I run out of information. I don't want to just keep talking for no reason. Don't want to overload you. Okay, so what were we talking about? Oh, yeah, the fact that cryptocurrency is much more volatile and can easily stop you out much quicker, the same way that you'll see quick take profits. That's just something to bear in mind when you choose what to trade. Now, let's look a little bit at structures like I was saying before. What you want to have on your chart, and what's a good idea to have, is this trend line drawing indicator. So from here, we can just literally make lines like so, and we can identify support, resistance, different structures, patterns, shapes, so on and so on. And again, this is not everything to do with trading. This is just one of those things that's going to provide you confluence and congruency for your positions that you enter. It's going to make you feel a lot better, and it'll help you understand where price could go and where it probably couldn't go. Because again, we don't know. It's a fugazi. It could go up, down, left, sideways. It could break through every single congruency and confluence that you have, and you have no way of stopping it, especially with cryptocurrency. So all these are, they are just narratives to support our theory. That's it. So for example, we're on the hourly chart. We see that Bitcoin is doing something right now called a squeeze. Squeezing meaning that if we were to draw a trend line from here to here and here to here, we have, and this is drawn very sloppily, but just let's go just based on the narrative for now. This is a symmetrical triangle, and by symmetrical, it means that these two angles are at the same blah, 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 they're at the same angle and all that shit. But the point is that we are squeezing to the end of this triangle. And when we squeeze to the end of this triangle, price has to go either up or down out of it, because let's say that price comes all the way to the end right here and it's just freaking, it's all tight and doesn't know where to go. It's going to explode one way or the other. And that's kind of the narrative when it comes to patterns like this. So now, with that being said, we've identified these trend lines. We've identified that price is squeezing. And what I like to do is call this liquidity. The strategy that I trade, I call this liquidity. We'll get into specific strategies in another class. But for example, from here, just to give you guys a little bit to go off of, this is when I would look for a trade, is when this price starts to squeeze out of here and makes a move. I would look to take advantage of that and get into a trade somewhere on the outside of this. It's been a long time since I've traded inside of these patterns, but that is one thing that you can do, is identify patterns like this. And you can say, oh, well, I see that price is in this symmetrical triangle here, and it's coming up to the top of this support resistance line, so I'm going to take a short position here, and I'm going to take it down to the bottom here. You could do that. Yeah, I mean, people do it all the time, but when price breaks out, you're going to be in for a ride. And that was a 40% move from the top to the bottom. But again, what I like to do is just simply wait for the squeeze out of something like this and take a trade there. I'm not going to go into that specifically right now. We'll talk about strategies in another class. Let's see if there's anything else I can look at. Is there any questions so far? I'll give you guys like 2 minutes to type a question if you have it. Anything you want me to look at? Questions about what I've said so far. Okay, let me get a sip of my water and we'll continue. So, given that I've gone over essentially the bare bones basics of what you need to identify before you make a trade, and the stuff that you need to know before you really get into picking a strategy, and so on and so on, I wanted to go through quickly just an order of operations when it comes to deciding that you want to trade, and that this is, you know, that this is what you want to do. But one of the hard things to decide when you first start is, how do I approach this? Where do I start? Do I need to know everything and then get started with trading, or I mean, do I need fucking 9 monitors? Am I a real trader if I have a fucking laptop? It doesn't matter. But I want to identify quickly an order of operations of what you should do when you start trading. Firstly, should be to absorb as much information as you possibly can. And by that, I mean literally as much as you can that you've decided or were able to filter out as decent information. Now, there's a lot of fugazi garbage out there on YouTube that you're going to be sold courses based off of by YouTubers and things like that. But obviously, we want to minimize the amount of that we intake and absorb, because it's a waste of space. But again, want to absorb as much healthy information as possible. We have a lot of links in the Discord for recommended books, videos, courses, things like that. And of course, if you are in the live streams and you come to these classes, you'll be receiving the best possible information, because it's already been filtered for years and years by Stan himself, trading for decades. And we've got a lot of intermediate level traders in here as well, who he is teaching himself. So you're going to be getting the best quality information here. So on the hierarchy, that's number one, absorbing as much information as you possibly can. And with that being said, this is not some sort of system where you're going to be able to study for 2 weeks, take a class like you would in university, pass the class, and now you're successful. This is a constantly evolving process. And as soon as you think you know enough and you're like, I'm ready to start trading, you get kicked in the ass, and it's like, no, you don't. You don't know shit. And I'm going to tell you why you don't know shit, or I'm going to show you why I don't know shit. This is the market talking to you. And then you lose a bunch of fucking money, right? So you get cocky, and that's just what happens. So with that being said, the second thing that you should do, in my opinion, is open a demo account. Now, you could also just use a very, very small amount of money and trade with that. But what I would suggest is going to whatever broker that you plan on using for a live account, if you've done your research properly on that, and that involves what I said before, step one, just making sure you absorb as much information, make sure you find the broker that's correct for you. But again, I would open a demo account. Now, you might think, oh, well, I don't even know, I don't know what strategy I'm trading. I don't know. I have no idea what the fuck I'm doing. Why would I open a demo account? Well, if you open a demo account, at least what you can do is you can open trades and you can close trades, and you can see the way that order flow works, and you can see how this shit is going to work when you do have some kind of strategy established. So I would open a demo account, get familiar with the interface and things like that, and just keep it on the back burner. Just keep it as something that you have ready for when you want to test out trades and test out theories and so on. So that would be my step 2 if it were me. Step 3 would be to have some kind of journal, trading journal or notebook. Now, this is something that when I started, I waited a long time to do. I waited for this to like step fucking 6, 7, 8. This is something that I found to be extremely, extremely important, extremely helpful for at least the beginning of your trading. It's not something that I rely on super heavily anymore, just because it can be very like mentally taxing looking at all your past trades and P&Ls and so on and so on. But at your stage of trading, I would certainly recommend getting a trading journal of sorts to make sure that you can lay out and you can see for yourself your past trades, and you can explain to yourself, this is why I lost this trade, and you can keep track of that as well. Not to mention notes that you can take from various classes, various courses, and books, and so on. So I highly recommend getting a trading journal. If that were number 3, then my number 4 would certainly be at this point to start to establish what kind of trader you are. Now, with that being said, like we said earlier, that just means establish, are you a type A or a type B person? Do you want to be in and out of this stuff, in 15, 20 minutes? I'd say most people are going to say yes, especially in our generation. But you also have to be honest with yourself and say, would I be better off waiting a day or two because I'm more confident in these type of trades and I can hold, a position for 2 days, 3 days, whatever. So we have to establish that as well. So if that was my number 4, then number 5 naturally would be to establish a strategy within that behavior itself. So if you decided you're a type A and you want to scalp, then we have to decide, okay, well, what kind of scalping do I want to do? Do I want to just do mean reversion? Do I want to trade ICT? Do I want to trade supply and demand zones? Do I want to trade the hybrid system? What exactly is it that I want to do? And that's something that is not a given right away. It's a constantly evolving process that you're going to realize, oh, well, I've been trading like this and maybe it's not really working out. And this is all going to happen within the first few months. So once you've established that, from there, the next steps in the process sort of come naturally, and we can discuss that as time goes on. But for now, I think those are the most important things to focus on. So just to summarize briefly what we've gone over so far, I've run you guys through the chart itself, candlesticks, time frames, indicators, and why you should not be using them or relying on them at the very least. Some very, very bare bones tools in TradingView, how to set up your chart properly. We've run you through indices and pairs versus cryptocurrencies, which ones you should trade, or how to decide which ones you should trade, because I'm not going to tell you what to trade. That's completely up to you. And we've also run you through briefly liquidity and how to identify trend and market structure. So, for example, higher highs, higher lows, so on and so on. We've gone over how to identify that. If there's anything you need me to go over again, please let me know. But with that being said, I'm gonna let Blackson or Stan take over from here and put in any 2 cents that they have. So. Yeah, Blackson must be AFK. He'll be back in a minute, but I'll leave the chat open for a few more minutes here while I just sip up my water and eat this food, and I'll let you guys come up with any questions that you might have specifically or anything for the next few minutes until Blackson gets here, and then I'll let him add on whatever he's got briefly, and then we'll end it from there. But yeah, so it's important to recognize that. Again, like I said, this is just the very, very bare bones, basic stuff that I would tell myself, or a younger version of myself, if I was asking how to trade and how to get into this kind of thing. It's very important that you don't overload yourself with information to start off with, because the information never stops flowing in this kind of thing, and you can easily wig yourself out if you try to learn too much. Yo, are we gonna cover any strategy today? Not any strategy in particular. I can go over a couple different strategy choices with you just really quickly. And then we'll cover those in another lesson. But today was just very, very bare bones basic for the brand new beginners. No, not every weekday. Probably like once a week, twice a week on average. Nice explanation, very clear. Thanks, bro. Try my best. What's that indicator using to see profit and loss amount? Oh, okay. This is just something that you can use to identify where you've entered a long or a short position from. Like for example, if I entered a short here, again, not an indicator, just very simply, I can say I want my stop loss to be here above these highs, and I want my take profit to be below these lows. So it's just something you add to your chart so you know where you're in a position on your given broker. Because remember, TradingView itself is not a broker. It is just a method that we can use to view the candles on a given instrument. Name of this is called short position and long position. It would be under no, not Fibonacci. It would be under whatever this little tab is on TradingView. 1, 2, 3, 4, 5, 6, 7th from the top. It's got your long position, short position, forecast, date range, price range, blah, 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 blah. So one thing to keep in mind is that given that we've gone over some basic stuff today, with this information, you should be able to hop in the live streams and be able to sort of learn at your own pace from there. Learn however you can and absorb whatever information you can. A lot of it's going to go over your head, like 80-90% of it if you're at the very beginner level. But the thing is, at least for me personally, I started off with this as a very visual learner. Like somebody could explain shit to me all day long, or I could read a book, and it didn't really register. But if somebody opened up a chart and I just watched them, they really didn't even try to teach me anything. If I just watched somebody explain and execute, then it came much more naturally. So if you know the bare bones basic stuff, it actually is a great help to just join the live streams and just watch people charting, because you can actually learn more than you think you can with that kind of thing. But not everybody learns the same way, so. All right, you got about 45 minutes so far. So this is the point where I'll just see if we've got any other questions. Oh yeah, somebody said they wanted to go over strategies really quickly. I'm not going to go into any specific strategy and how to use it, but I will go over again what I mean when I say different strategies. So remember how we established before that we have swing trades and intraday trades, so like scalps and things like that, you know, where you're going to take a trade within an hour or a few hours during the one specific day, or you're going to hold a trade over the course of a few days or a week. Within those methods themselves exist strategies. And these strategies, really, they just develop by people who are good at identifying patterns and good at identifying congruencies in the chart. So, for example, we've got ICT. Now, this is something you might want to write down if you have a pen and paper next to you. All these different strategies will be of use to you, because this is how you're going to decide how you actually want to trade. Unless you come up with your own strategy and you're some kind of fucking genius with 160 IQ, then that's, you know, more power to you. But we've got things like ICT, which is another word for, or another way of saying smart money concepts, if I'm not mistaken. We have hybrid system, traded by like Traders Reality, Tino, and things like that, with PVSRA vector candles. We have mean reversions. We have moving averages. We have range trading, breakout trades, momentum trades, all these different things that you can Google right now and see how to trade them specifically. And you can execute a trade on it, well, right now if there's a setup for it. But this is one of those things where you're going to have to watch other people trade, say, I really like how this guy's trading this specific strategy. And then from there, you're going to have to put it into practice. And it's going to take a lot of time to properly put something like this into practice. Now, if you're a quick learner, I don't know, it could take you a month or two. But on the long side, it could take years to perfect something like that. So, and not even perfect, because like I said, this whole thing is a complete fugazi. We have no idea where it's going to go. So there really is no perfecting this kind of thing. We don't have a rifle. We're not marksmen, shooting a target. And we know where the bullet's going to go if we zero our optic properly. It's not how this stuff works. The target's constantly shifting. So yeah, that's what I would recommend. If you benefited from the information in this live stream, what I would recommend doing from there is starting to establish some kind of direction and where you want to take your trading. If it's something you want to do as a hobby, on the side from work, where swing trading might be more your friend, because then you have the day to do stuff. You don't have to just be monitoring a trade all day. Or this is something you want to do to supplement income, so you can get into more day trading and things like that. So all right, so give you guys about another minute to ask any other questions you might have. I want to see what's up, Lucas. All right, we got nothing. All right, guys. Well, Trashman's having another class tonight, I think around 4 o'clock. And that one's going to be covering some more basic stuff. But I think he'll be getting a little bit more into swing trading tonight. So if you have interest in swing trading specifically, or you want to learn more about it, then join Trashman's class tonight at 4 o'clock. And then I believe we're also having another class at the end of the week, or at least once more this week. So stay tuned for what that is. It'll just be a little bit more in depth than what we covered today. So if you were in today's lecture, then I would highly recommend going to the next one. And just something to bear in mind is that I'm not, I'm not a seasoned trader. I haven't been on Wall Street, and I'm not any of these things. But what I am is just somebody who can speak to brand new traders and then knows what to say to them. Because several months ago that was me, and now I have a lot more knowledge, exponentially more. So all I can do is just try to guide you in the right direction, and not try not to waste your time. Because luckily, I've been lucky enough to have access to premium information and premium discords and all these things. And I don't mean literally premium where I'm paying for it, but I mean premium as in it should be things that should be paid for, because the information is so valuable. Like Stan and like other people that I've encountered along the way. So I've been lucky enough not to waste years and years with garbage information. So all I can do is just try to help to guide you guys to do the same. So if you are interested, join Trashman's class tonight and join the other class at the end of the week. And then most importantly, this lecture itself will be posted on YouTube at the apexbull YouTube channel, and we'll post a link for it in the Discord. So if you missed anything or want to go over anything again, then you'll have access to that. So yeah, thanks for joining, dudes. Really appreciate it. If you enjoyed it, just leave a little review on Trustpilot or throw something in the testimonies channel. That would be much appreciated. So yeah, take care, guys.